We have a gold system as well, which is an alternative private money. There now, the problem with the private money on gold is I think, I don't know what the U.S. holdings are, but I think 8 million tons or some of the huge number of gold there. So there's a lot of government control of gold.
Bitcoin, we believe, is a public good. This is financial superhighway. Everyone should have easy access to it and learn about it, because when they start with an ETF, they will learn more, and then they will want to do more in the way of self-custody and just get more involved into the community.
ARK Invest first became involved with Bitcoin in 2015, although their interest in the cryptocurrency began earlier. 2015 marked a pivotal year when they took action by purchasing shares of the Grayscale Bitcoin Trust, a security they could include in their ETFs. ARK's founder, Cathie Wood, sought validation for Bitcoin's economic potential from renowned economist Art Laffer. This followed a white paper written by Chris Burnisk, which explored whether Bitcoin could fulfill the 3 traditional roles of money and examined its underlying technology. After reviewing the paper, Laffer endorsed it. At that time, Bitcoin's market cap was just $6 billion. When Cathie Wood asked how large Bitcoin could potentially grow, Laffer suggested comparing it to the U.S. monetary base, which was approximately $4.5 trillion. This comparison boosted ARK's confidence in Bitcoin's future growth. As a result, ARK purchased GBTC, initially limited to holding 1% of the portfolio, but as Bitcoin appreciated, it grew to represent as much as 10% at one point. Fast forward to 2024, Cathie Wood and Art Laffer appeared in an interview with Preston Pysh at the Bitcoin conference, reflecting on ARK's early involvement with Bitcoin and showcasing their deep understanding of global monetary policy. Clips from this interview offer further insights into their conversation with Pysh.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
One of the things that, of course, President Trump is animated about is trade, and exactly the issue. So, and I know you do compare notes and everything. What is he doing? He must agree with you. He's a good businessman. Larry Fink's conversion was very important. That was a moment. Remember, he was denigrating Bitcoin for years, very focused on the environmental side of it. But how is it perceived? Well, the first thing that happened was Grayscale, because it kept its fee at 2%, donated a lot of share to all of us. Right? I mean,
why was that? That just doesn't make any sense. Why they kept it like that. Let's just put it
this way. We think it was a miscalculation. And the CEO, who I've known him for a very long time, he quit. I think, and now they're putting, if you look at what they did with Ether, they have, they've introduced not only the conversion into the Grayscale Trust into an Ethereum ETF, but also an Ether Mini for 10% of it. So the cost there is 15 basis points. And I think I don't know if they're keeping it at the rest at 2%. I don't know. I don't understand the strategy. But first donated a lot of share, grew the market in terms of, beyond what Grayscale offered. So the education of 11 ETF providers vying for business at the same time, the education around that was tremendous. And you had most of the major asset management institutions involved, whereas, when we were in our early days, they thought we were using a marketing gimmick, or there was, always a reason not to consider what we believed was a new asset class. So first, donation of share to lots of other players, all of whom have educated. But the most interesting thing is it really has not hit yet, because the big platform, we call them wirehouses. So Morgan Stanley, Wells Fargo, Bank of America, Merrill Lynch, LPL would be an independent one, UBS. None has approved them for the platform. And this is all deepening the liquidity of the market, which is what these that's a lot of what they're studying right now. How liquid is this market? Do we need derivatives? We'll wait for I mean, they will use, I think when one goes though, the others will follow quickly. So I don't know if they'll wait another 6 to 9 months for derivatives. Maybe. I think someone will jump the gun before that, especially because it's become such a big campaign issue. And you've got, I mean, former President Trump, taking donations in crypto. Wow, that was surprising. But saying that he would guarantee the right to self-custody, very big in this community, right? Very, very, very big. Focusing on the minors and saying, yeah, America first. Yeah, we need them here. That's great. That was wonderful. And then, of course, what happened in Congress, the idea that the FIT 21, so Financial Innovation Technology of the 21st Century Act, FIT 21, got 76 or 78 Democratic votes in the House. Nobody expected that on Wall Street. Maybe that was becoming current wisdom, but that was big. That was big, I think, in terms of what I just said. The financial markets are waiting for cues to say, okay, it's okay to go. It's okay to go.
Kathy would suggest that President Trump views trade deficits as evidence that the U.S. is getting a raw deal in its trade relationships, particularly with countries like China. She believes that, given Trump's business background, he likely sees this issue in transactional terms. The U.S. is buying more from other countries than it is selling, which he interprets as losing money. However, the effectiveness of this approach in benefiting the economy is widely debated. Many economists argue that trade deficits are not necessarily harmful and are part of a complex global trade network that offers consumers cheaper goods and services. Nonetheless, Trump's focus is on achieving balance and protecting American industries from what he perceives as unfair foreign competition. Kathy also emphasizes the significance of Larry Fink's shift in attitude towards Bitcoin, especially considering his previous criticism due to environmental concerns. Fink's change of stance represents a crucial moment for the cryptocurrency sector, as his approval carries substantial weight in financial circles. For further insights, let's return to the interview with Kathy Wood.
If you guys haven't read the code book, or you can get one thing that's really important about money, and really important, is anonymity.
Exactly.
You need anonymity, period. And if you don't have it, it becomes an instrument of the government to go into your private life if they can trace you back. And anonymity is reasonable, easy, and trivial to solve. Read the code book here if you want to do it. I mean, I think I recommended it to you.
You didn't only recommend it to me. After our meeting, you sent me this copy.
Okay, I sent him the copy. You've got to understand the math, and you got to think of quantum security issues, encrypting, and all of that. But it is trivially easy using prime number series to be able to guarantee anonymity, where you and the other party have the code break, and there's no way it can ever be broken, period, done, all over. The winners now are the encoders, and you can do that with Bitcoin and make it happen.
Bitcoin, we believe, is a public good. This is financial superhighway. Everyone should have easy access to it and learn about it, because when they start with an ETF, they will learn more, and then they will want to do more in the way of self-custody and just get more involved into the community. Any fiduciary knows that if you introduce a new asset class into your asset allocation, the correlation of the returns associated with that asset class are going to be low relative to the other assets. So it's important to include it to increase returns per unit of risk. It's that low correlation that lowers the risk of the portfolio in general. So, I mean, that's how we've positioned what's going to happen near term. Longer term, I guess, we shall see. I think there are going to be share shifts in terms of this asset class, given the kind of appreciation we expect. We think its share of asset allocation will go up fairly significantly. And we did a study on that as well, using, minimizing volatility, maximizing Sharpe ratio, all the things that traditional financial asset allocators look at, you should start out with at least 2.5 to 5%. And that is how a new asset class starts. I remember in the 70s, when I was very new to the business, real estate was a new asset class for pension funds. Then in the 80s and 90s, emerging markets became a new asset class because MSCI had basically said, you don't have to take a risk on what this country or that country. Here, we're going to bundle these. So it became actually a new asset class. And here we are at the threshold of yet another new asset class, Bitcoin leading the charge. So I think the ramifications for Bitcoin are going to be quite significant, and it will take share, as will other crypto assets, I think, from traditional financial assets.
In an interview with the Wall Street Journal, Cathie Wood made some striking predictions about Bitcoin's future. She proposed that Bitcoin could potentially reach $650,000 per coin in her base case scenario, and in a more optimistic view, it might soar to between $1 million and $1.5 million per coin. Reflecting on the skepticism Bitcoin faced last year, particularly after the collapses of FTX, Celsius, and Three Arrows Capital, Wood pointed out that these failures led many to believe Bitcoin's end was near. However, she noted that the opposite has happened, with growing recognition of Bitcoin's resilience. Wood emphasized the fundamental differences between Bitcoin and entities like FTX. While FTX was a centralized entity with serious transparency issues, Bitcoin operates on a decentralized network with a global team of developers continually safeguarding it from fraud. This decentralized nature is a key factor in Bitcoin's resilience, as evidenced by the fact that both the Bitcoin and Ethereum blockchains continue to function smoothly despite FTX's collapse. Wood also highlighted the potential impact of a spot Bitcoin ETF on Bitcoin's value. She believes that such an ETF could significantly drive up Bitcoin's price by making it more accessible to average investors. An ETF would offer a regulated and secure way to invest in Bitcoin, simplifying the process compared to using platforms like Coinbase. As we conclude, what do you think? Could Bitcoin realistically hit $1 million, or is this too optimistic? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.